Good morning, viewers. I'm making an attempt to introduce to the aspiring students for examination uh, the various in the form of lessons, how to go about it, and uh, though my lessons are going to be brief, at least it will give an idea uh, of what consists in a learning for examination subject as such, and where they can aspire to become a product examiner by uh, passing the relevant examinations. So uh, I am hopeful that this will be of some guidance to mostly to the aspiring students, as well even laymen who are non-accountants also. These brief lessons maybe of some give some understanding of this fraud examination, because day in and day out we keep reading in newspapers, and as you can see from my posting on LinkedIn and the website and all, several frauds taking place day in and day out. Okay, so my first thing is part one, and lesson one, fundamentals of accounts. See, let us all assume that we are starting from ground zero. Okay, so first, before you go into the main topic of frauds and all that, one should understand the fundamentals of accounting. See, the accounting concepts. Okay, one should understand the basic of accounts. What are the financial statements, and what are the generally accepted principles of accounting standards and policies? Because after understanding the accounting basis, the financial statements, which we will discuss what they consist of, are prepared based on accounting policies, which are called generally accepted accounting policies, GAAP. Okay, so the accounting concepts consist of basically debit and credit. Okay, that is called a double entry aspect of maintaining accounts. Okay, all the that we talk of assets and revenues. Okay, they are represented, assets and expenses are represented by debits, and the liabilities and the owner's equity and the revenues that we talk of, they are reflected by way of credit. And when these assets and liabilities are presented in a statement, it's called a balance sheet, okay, which shows the assets uh, and the liabilities and the owner's equity. And all the debits consisting of expenses and all the credits consisting of the revenue generated, which are reflected in the form of a statement called profit and loss account or income statement. So together, this balance sheet and profit and loss account and cash flows. Cash flows means the flow of inward cash and outward cash, and that is reflected as per financing activities, for what cash is spent and for other outflows. So that is called the cash flow. That shows how the cash flow has occurred, the incoming and outgoing transactions, which is most also important for forecasting and budgeting and all that. So fundamentally, accounts, financial statements consist of balance sheet, profit and loss account, and cash flow statement. You see, the goal of accounting, understanding accounting basic is that we do the accumulation of data, measurement of data, and communication of accounting data in a format that is understood by the public and all those who make use of these accounting statements. So, like that, as I already told you, these accounting statements work on the double entry basic concept, fundamentals. Okay, so for every debit, there's a credit, for every credit, there's a debit, in simple terms. So, assets can also means all the liabilities plus owner's equity. Okay, they are equal to the standard format of formula. In any financial or money related fraud, examiners one should need to understand the debit and credit process. So before you become fraud, one should be thorough with these concepts of the financial statements and this how they work. Okay, debit and credit. So, yeah, naturally, as all many of you are aware, the accounting entries before the preparation of financial statements are passed through journal entries and cash and bank transactions. And the summary of those transactions is reflected in balance sheet, profit and loss account, and the cash flow statements. Now, transactions are generally maybe cash basis or cumulative basis, but the general accepted accounting the policies and any and across board are only the accrual basis. Accrual basis means whether you received it or not. The money, the transaction is passed. Suppose that means if there is a credit sale, it is recorded. Okay, even though the money is maybe realized later. So that is called the accrual basis. So cash basis is only for understanding that where there used to be maintained cash basis accounting, maybe followed by sole traders or small traders and all that one. But any organization and companies and all, they must statutorily also should follow the accrual basis of accounting. Okay, so financial statement does include balance sheet, profit and loss account, and cash flows. Okay, and also where there are so many other statements that come out of this accounting transaction cycle, like statement of operations, forecasted budget, statement of revenues and expenses, and tax-based accounts statements, and etc. Okay. So, thus, as I told you, a balance sheet represents the financial position and the statement of affairs of assets, liabilities, and owner's equity, and then they are again shown under various subcategories as per the statutory requirement. Similarly, profit and loss account shows all the revenues and the various expenses, okay, but pertaining to the period, and it is called profit and loss account or income statement for a period of normally 12 months. Then all these are prepared on the basis of capital and revenue basis. So all the capital related expenses and all those things are reflected in the balance sheet, and revenue related are all reflected in the profit and loss account. So actually, as we go along, we see how the accounting statements are manipulated by improper reflection of these capital and revenue items to show a position that is either to show losses or to show more profits, and that is called as window dressing and all that one. And so the concept of capital and revenue and the preparation of financial statements is of high importance. So, what is the overall importance of these financial statements? You see, that is not only for the company management to know how it is going on, the financial position of the company, and as well the profit and loss of the company for a financial year, and also there are investors like the shareholders and other stakeholders who have invested in the company. They want to know what is the performance of the organization in a financial year, and also regulatory agencies like stock exchanges, company registrars, and others, tax authorities, and all also require the performance of the company. And besides the third parties like vendors and customers and all, before they transact any business with the company, they maybe want to know what is the state of affairs and how the company is doing, and things like that. And so, in the one thing to understand is this gap we said generally accept accounting principles that may be different from country to country. Even though in US they strictly follow gap, but still there is a IFRS, uniform platform of international financial reporting standards, and it has emerged from gap, and that country to country that is uniformly followed from based on their regular accounting policies, so that there will be a uniform and representation of accounts, especially when you are having dealings with the international across companies, or if you are having several branches and locations so spread over the world and all these things, then IFRS is very high importance. And one thing to remember is all these financial statements and all are prepared keeping in mind the materiality and uh, faithful representation and comparability, and they should be consistent. If there's any inconsistency something, they should be measured under the financial statements and the balance sheet and all. There's notes to accounts where any change in policies and the deviation, what is the amount affected, and all these things have to be shown as a note. And so there should be consistency. If there's any change of policy, that should be also be reflected in the notes to the account, so that the people making use of the financial statements will know the actual state of affairs uh, and what are the changes that took place in the financial year in the preparation of the financial statements. So, and another thing is all these corporates, everybody prepares their financial statements and all, and as a going concern, that means we do not expect the concern is going to shut down any time or things like that, but we assume that this organization is sustaining and goes into, long into the future for uh, with uh, with proper operations, and and so that is called the going concern concept, which is most important aspect while discussing the financial statements preparation and understanding things. And so, in brief, to summarize, hmm, we understand the financial statements are the fundamental things that one should understand, because all the frauds, whatever may be, and mostly the financial related frauds, everything is dependent on these financial statements. These financial statements are manipulated. The balance sheet is manipulated. The profit and loss account is manipulated. The capital revenue aspects are manipulated, and the reflection of accounts is not true and fair. Materiality concept and the other aspect of consistency and all, they are manipulated. So, to understand further that from the fraud angle, as an accountant, first we should understand the importance of financial statements, what the financial statement consists of, and how they are reflected, and who makes use of them, and their importance as such, because it's a fundamental. Even in day to day, we, without knowing, everybody talks about these things only. Even in your home, when you talk of your what is the amount you are getting per month and what are the expenses that you are going to spend. Huh? Uh, Suppose you have certain amount of income coming and you have certain commitments at home, and there are education expenses, monthly expenses, EMIs, and all that. You keep on balancing. So it's a process which is invariably followed by one and all, even though they are laymen to their accounts. And nowadays, with the banking operations, everything also becoming very online banking and all these things, and people, depending on banks and everything, they, even though they do not know the basics and the other academic related aspects of the thing, they are invariably doing the accounts of what's coming in, what's then. Okay, they may not know what is debit, credit, and all these things, but at least they know what is coming in, what is going out, what is their projection, how much they have to earn or something to pay off these things. And so, like that, anyway, it's happening. But in a broader context, to understand and go further into the fraud angle, one should know much deeper. And I may say here that I am touching uh, the basic thing to give us a kickstart so that people can further read or communicate with me in order to know anything much more about this one, because I do not want to extend these lessons more than 15-20 minutes, because it's an extensive learning uh, about the fraud examination and various aspects of frauds and those things. But this being the fundamental thing, I started as the basic lesson. So I hope these lessons down into the future will be of some use and gives guidance to the aspiring students for fraud examination, or people who are reading about these frauds and all that one, to know better of what's happening. Thank you.